Good afternoon, and welcome to Amwell's fourth quarter and full year 2020 conference call. At this time, all participants are in a listen-only mode. After the speaker's presentation, there will be a question and answer session. We ask that you limit yourself to one question. Please be advised that today's conference is being recorded. Leading today's call are Dr. Ido Schoenberg, Chairman and Co-Chief Executive Officer, and Keith Anderson, Chief Financial Officer. Ido and Keith will offer their prepared remarks, and then they will take your questions. The Amwell press release and webcast link are available on the Investor Relations section of Amwell's website. Please note that we will be discussing certain non-GAAP financial measures that we believe are important in evaluating Amwell's performance. Details on the relationship between these non-GAAP measures to the most comparable GAAP measures and reconciliations thereof can be found in the press release that is posted on our website. Also, please note that certain statements made during this call will be forward-looking statements as defined by the Private Securities Litigation Reform Act of 1995. Such forward-looking statements are subject to risks, uncertainties, and other factors that could cause the results for Amwell to differ materially for those expressed or implied in this call. And now I'll turn the call over to Dr. Ido Schoenberg, CEO of Amwell. Ido?
Good evening, and welcome to our 2020 fourth quarter earnings call. 2020 was a significant year in many ways, especially in the world of healthcare. The pandemic stressed and challenged the entire healthcare ecosystem. Throughout the pandemic, Amwell empowered the providers of healthcare to continue to deliver care to their patients and also care for greater numbers of patients through virtual and remote care. The pandemic, while terrible, probably accelerated our transformation and impact timetable by about 3 to 5 years. Patients and members have now embraced receiving care virtually. Providers of care are comfortable and in some cases encouraging delivering care virtually to their patients across the care continuum, well beyond rudimentary urgent care where pre-pandemic telehealth focused. The pandemic did not stop doctors and nurses, and Amwell kept many of them in practice, delivering care to their patients. For example, we powered cardiologists whose offices were abruptly closed to enable them to continue seeing their patients and monitoring them remotely. We help obese see pregnant mothers as they progress through their pregnancy and enabled endocrinologists to follow up on their diabetic patients. In other words, the pandemic highlighted the power and differentiation of the Amwell platform. We were able to demonstrate how the Amwell platform could enable overall care delivery in the new hybrid world. In 2020, we delivered over $245 million in revenues and are forecasting between $260 and $270 million for 2021, representing a growth of over 35% over the last 2 years. In 2020, our platform supported 6 million visits, which is about 5 times the volume we saw in 2019. Most importantly, we added over 65,000 active providers to our platform, bringing the total number of active providers to over 72,000 at the end of the year. It was incredible to see that 68,000 of them were not our AMG providers, but rather our clients' own providers. During this transformative year, we watched with admiration the selfless work of our clients and partners, especially the healthcare providers, in their heroic and courageous fight against COVID. Prior to the pandemic, and even in January of 2020, many viewed telehealth as complementary, optional replacement service to simple urgent care. We now proved that this utility is only a small part of telehealth. COVID helped solidify Amwell's role as enabling digital care delivery infrastructure across the entire healthcare continuum. it rapidly became apparent that telehealth does not replace in-person care. Instead, and especially through Amwell, it complements it and can be instrumental in strengthening existing patient-provider relationship. For example, the Chartis Group estimated that over 50% of visits were done virtually at the height of the pandemic, up from less than 1% before COVID. And today, the analysis is showing that the proportion of visits conducted virtually has stabilized around 15 to 20%. Also, according to McKinsey, health systems, independent practices, and other providers saw virtual visits increase by 50 to 175 times compared to pre-COVID. And among providers, 57% view telehealth more favorably than before COVID, and 64% are more comfortable using it. Our conversations with payers and providers also changed substantially in 2020, from focusing on affordable complementary services to empowering mission-critical technology. Digital connectivity enablement became a high priority for most of our clients and partners. Simplicity, reliability, modularity, extensibility, and efficiency took priority over other features and functions. The ability to integrate with existing digital assets through easily supportable solutions also became very important. We were very attentive to the new market needs and took significant measures to quickly address them. We saw visits in April 2020 as high as over 40,000 per day versus approximately 5,500 in January. Reacting to the tidal wave of demand, we grew capacity by about 10 times in 2020. We launched a series of platform modules and care points aimed to dramatically simplify connectivity and make it more accessible and affordable. We also streamlined integration with many other assets of our clients and partners. These innovations also included the super simple and popular Amwell Now that help and is helping further accelerate provider adoption across delivery networks. They also include the deeply integrated Amwell Connect EHR module, the new affordable Amwell Touchpoint tablet, the Amwell C500 care point that is both home and hospital enabled, and the revolutionary Amwell Hospital TV care point that we discussed on our Q3 call. We experienced significant growth across all segments of our business last year. Compared to 2019, in 2020, active client providers grew over 13 times from 5,000 to 68,000. We grew total visits 5 times from over 1 million to 6 million. Client provider visits accounted for over 70% of our total annual visits, up from 35% in 2019. And AMG provider visit volume more than doubled from 750,000 to 1.6 million. Maybe even more important within our visit results is the continued shift to specialty visits. Behavioral health visits grew by 1,000%. Surgical care grew over 2,000%, and dentistry doubled. These trends created clear separation between Amwell and legacy telehealth players aiming to offer affordable and convenient alternatives to physical services. We have always focused on enabling and empowering trusted payers and providers and not on creating alternatives to their offerings. The transformation in the market's view of telehealth from a service to a platform is fast and profound. As the pandemic stabilized late in 2020, most of our clients began preparing to significantly expand their frequency and scope of use of our platform. In reaction to this tectonic market shift, we decided to accelerate our investment in innovative technology that powers our platform as well as its modules and programs. Looking ahead, we see a rapidly evolving landscape in which trusted healthcare players develop hybrid models of care. They increasingly rely on Amwell to deliver an easy-to-use yet comprehensive platform to enable the full spectrum of their telehealth needs. Importantly, this care will be longitudinal, enabling the relationship between providers and patients over time, as well as supporting interdisciplinary team-based care delivery models. We recognize that many of our clients and partners have their own preferences and investments as it relates to telehealth adjacent technologies like navigation or remote patient monitoring. We are therefore making sure that our platform does not overlap or compete with these assets, but rather makes it seamless for our clients and partners to integrate and embed their own choices. In 2021, we will continue our investment in our post-COVID technology platform build-out that we briefly discussed on our third quarter call. We named the next release of the rapidly evolving Amwell platform Converge. At our upcoming client forum on April 28th, we will present it and feature new functions and dynamics. In advance of the forum, and to help you frame our future and outlook for 2021, I will share that the key focus of Converge is the continued evolution of enabling care from episodic to longitudinal with a recurring relationship at its core. It also provides new possibilities for our clients, partners, and third parties to further expand and diversify use cases enabled through our platform. The combination of our technology and its ubiquitous adoption across the ecosystem are likely to generate significant long-term competitive advantage for Amwell. Converge capabilities will also expand our TAM by both increasing our value to existing clients and opening new markets and opportunities for us. The release of Converge is an important multi-year milestone for Amwell. An early example of our new longitudinal capabilities is demonstrated in the virtual primary care module, which we recently deployed. We believe that our VPC module is demonstrative of how healthcare will be experienced in the future. It provides patients a simple and convenient choice of online and in-person options, including referrals, imaging, and lab services. It preserves the long-term and recurring relationships with the primary care providers and others, while allowing payer sponsors to control utilization patterns without compromising on member experience, trust, quality, and value. We are excited about the technology innovations we will present to the market this year. I encourage you, our investor partners, to attend our client forum in April. We believe that our innovative solutions uniquely address a strong and urgent need in the market. And now I would like to turn the call over to Keith to review our financials.
Thank you, Ido, and good afternoon, everyone, and thank you for joining us for our fourth quarter call. Before diving into our detailed results, I want to reiterate Ido's comments about how pleased we are with how we ended the year, and I'm happy to report that we have exceeded every forecast metric and are seeing continued momentum across all of our business lines. The conversations we are having with our current and prospective customers highlights their acknowledgement of the unique capabilities of our platform to deliver true longitudinal care coordinated by your health plan or your doctor. This theme has been the core of our strategic partnership conversations, as we believe the new healthcare will require coordination of a full spectrum of care. Now, a couple of points on our full year 2020 performance before we dig into the quarter. We ended the year generating over $245 million in revenue, which equates to 65% growth over the prior year. A large part of this growth was due to subscription average contract values expanding from $282,000 to $334,000 in 2019 to 2020 for our health system customers, and from $546,000 to $612,000 for our health plan customers. The number of health system customers also grew from 140 to 158 in 2019 to 2020, and from 56 to 58 for our health plan customers. In terms of active providers, at the end of the year, there were over 72,000 active providers on the Amwell platform delivering care to their patients. While this is a 10x increase over the prior year and highlights the hard work of our team, in many cases bringing full hospital system doctor groups on the platform in rapid fashion, the explosion of our customers' own providers plugging into the Amwell platform is the most important long-term metric, as these non-Amwell doctors grew 13 times from 5,100 providers in 2019 to over 68,000 at the end of 2020. As reference, during the same period, the number of our own AMG providers grew from over 1,800 in 2019 to 4,500 at the end of 2020. As we first highlighted during the IPO and then on our Q3 call, this intended shift in care delivered by our customers' own providers is a critical dynamic that has been accelerated by the pandemic. To illustrate, 66% of all visits in 2019 were performed by Amwell providers. In 2020, this dramatically shifted to where almost 70% of all 5.9 million visits, or 4.3 million, were performed not by Amwell providers, but by our customers' own providers. Reminding you that one of the primary tenets of Amwell is not to compete against the providers of healthcare, but to enable and facilitate their ability to deliver care to their patients. It is this fundamental difference in our business model that will allow Amwell to capture the network effect of care delivered virtually and all that surrounds and coordinates full longitudinal care. Now turning to our fourth quarter financial results. I'm happy to report total revenue of $60.4 million, which is a 34% increase this quarter last year. Our subscription revenue came in at $26.3 million. The 15% increase over the previous year can be attributed to new customers, expanded programs within the health plan populations, and an increase in the volume of platform visits performed by our health system and health plan customers' own providers. In terms of visits, our visit volume remains elevated in comparison to pre-COVID-19 levels, driving a steep increase in our visit revenue, which totaled $26.2 million this quarter, up 75% over the previous year. In this quarter alone, 1.6 million visits were performed on our platform, bringing our total visits in 2020 to over 5.9 million. This is up 11% sequentially versus the 1.4 million visits performed on the platform in Q3. As we forecasted, we saw AMG visits decline 5% sequentially from Q3, but within AMG visits, it's notable that we continue to experience significant growth in AMG specialty visits, which is on top of the dramatic increase in Q3 over and above Q2, which was the peak of the pandemic. This shift to more specialized visits versus simple urgent care has driven our average price per visit up to $73 per visit in 2020 versus $54 per visit in 2019. As I stated earlier, we continue to experience outsized usage of our platform by our customers' own providers, as 77% of all visits performed on the platform were conducted by our health plan and health system customers' own providers. Recall, this percentage was 73% last quarter, so the dynamic in Q4 was similar to the peak of the pandemic in Q2, an overall trend that we see continuing throughout 2021 as healthcare delivery systems move to more hybrid care models, combining physical and virtual care. Our services and care points revenue of $7.9 million was an increase of 10% year over year, but a decrease of 5% compared to last quarter, where if you recall from our third quarter call, we discussed some pull forward buying into Q3 due to the expiration of the CARES Act and the spending of these remaining funds in Q3. Gross margin for the quarter was 37.4 compared to 32.7 last quarter versus 44.7 last year. Versus last quarter, we continued to realize additional high-margin subscription revenue due to those contracts that contain volume components. The year-over-year margin decrease was a direct result of revenue mix shift to more visits versus 2019. G&A expense experienced a 36% decline versus last quarter as our IPO occurred in Q3, and there were related one-time non-cash stock-based comp awards to our executives that were triggered by our successful IPO. With the IPO now behind us, Q4 G&A resembles a more normalized spend level in the mid-$20 million range. We are reporting an adjusted EBITDA loss of $35.4 million compared to $16.9 million loss last year. On a macro level, this was due to revenue mix shift to lower margin visits, continued investment in the platform, and expenses incurred typically of a public company versus last year when we were private. From a balance sheet perspective, we ended the year with cash and investments of approximately $1 billion, and Amwell continues to have no debt. Now turning to forward guidance. For the full year 2021, we expect revenue to be in the range of $260 to $270 million, representing a 35% compound growth over 2019. Similar to 2020, we are expecting visit revenue to account for approximately 50% of overall revenue, driven by forecasted visit volumes between 1.5 and 1.7 million AMG visits. We are forecasting an adjusted EBITDA loss between $157 and $147 million. As we did during our IPO, in an effort to be transparent and given all the moving parts and uncertainty amidst the COVID-19 crisis, I want to provide a few high-level thoughts on framing 2021. Most notably, we are projecting in 2021 AMG visit volumes at levels similar to during the pandemic, with the midpoint of our range at 1.6 million visits, the same volume as we delivered in total in all of 2020. Now that is an important data point. As said differently, we see visit volumes coming out of the pandemic as foundational and not episodic. The underlying data supports that both our provider and health plan member customers have embraced delivering and receiving care virtually and are doing so on the Amwell platform. While we're projecting more normalized flu season later in 2021, we continue to observe a mix shift towards specialty visits versus urgent care, and thus are forecasting revenue per visit to continue to increase to around the $80 per visit range versus $73 in 2020 and $54 in 2019. Subscription revenue from our innovator customers and revenues from sales of our care points and services are projected to return to more normalized levels as discussed during our IPO. Regarding R&D spend, as Ido discussed earlier and we highlighted on the third quarter call, we expect R&D expense as a percentage of revenue to continue throughout 2021 at the same levels as the fourth quarter of 2020. This temporary increase is driven by foundational changes in customer sentiment to use digital connectivity as part of mainstream healthcare, and thus we have decided to accelerate the Converge platform project in advance of these longitudinal care type products. We'll talk more about this at our upcoming client forum in April. For the first quarter 2021, we are expecting revenue to be lower than in the fourth quarter of 2020, in part simply because of a fewer number of days, but more so the churn of 2 large contracts due to M&A that we identified and discussed during our IPO. Also, the run of care points in Q3 and Q4 of last year, pulling revenue forward into those quarters and out of the first quarter of this year. And finally, specific educational marketing campaigns by the health plans that occurred in the fourth quarter of last year. Looking beyond 2021, the Converge platform will expand our TAM through expanded partnerships and functionality, and is the basis of some of our inorganic strategic discussions related to longitudinal care. I want to highlight, though, that while we have accelerated this platform investment into 2021, our timeline to achieve EBITDA profitability remains unchanged. In closing, I'd like to reiterate how pleased we are to report yet another strong quarter, as this is only our second quarter since becoming a public company. I look forward to reporting progress toward our goals and forecasts this year in 2021. We are well capitalized for growth and positioned to maintain a leadership position in the telehealth market and I look forward to supplementing this foundational growth with our inorganic strategy. With that, I'll turn the call back to Ido for his closing remarks.
Thank you, Keith. I want to thank all our incredible team members for their hard work over the year, supporting our customers and partners during their challenging times. It is clear to me that our platform enhances providers' abilities to deliver high-quality care to their patients today. The investments we are making will help us continue that well into the future. With that, operator, we'll open the call to questions.
Thank you. To ask a question, you will need to press star one on your telephone. To withdraw your question, press the pound or hash key. Again, we ask that you limit yourself to one question. Please stand by while we compile the Q&A roster. Your first question comes from the line of Ricky Goldwasser with Morgan Stanley. Your line is open.
Yeah, hey, good evening, and congrats on the quarter and guidance. Clearly there's a lot of demand for your services. You are pulling forward the investments in new product development. When we think about your long-term guidance of 20 to 30% top-line growth that you provided at IPO, is that the right way for us to think about jumping here to 22, but to think about 2022 or and beyond? Or are you now seeing sort of a step up in demand that is shaping how you think about that long-term revenue opportunity? And then somewhat related, Keith, you talked about the revenue per visit assumption of $80. What are the underlying assumptions that you're making regarding reimbursement for telehealth visit and any potential changes in the parity versus in person, or rebasing it to a different level?
So, Ricky, I think there was about 5 questions embedded in there. So I'll take the first couple, and then I'll hand it over to Ido, to talk about reimbursement, and then some of the more conceptual answers to your last question. Yes, we are seeing. So, I mean, to answer your first 2 questions, we are seeing a step up in demand. We are going to stick with what our IPO revenue growth targets were right now, but we look forward to updating you, throughout the year, especially coming out of the client forum in April that I'm hoping you'll attend. We are seeing the TAM expand, through the platform expansion, and we're already achieving, as I mentioned, if you normalize for, the 2 contracts, we actually are in the mid-20s% growth this year for subscription. So, yes, we are sticking to what we said during the IPO, in terms of long-term growth, but we will update that, as we go through the year. In terms of the price per visit, we're saying around the $80 range, but it's the shift that happened in Q4 is continuing in Q1, to more specialty. And going back to what the overall mission statement of the business is and what our strategy is, it's to provide backup supplemental care and really empower the providers, of care, your doctor, your health plan, and the health plan's own providers to deliver that care. So we're seeing, urgent care become more secondary, specialty care, become more primary as we support those providers of care. So, we're seeing, as Ido, quoted, some explosive growth on our specialty side. It's now making up about half of our overall visit volume, which is exciting. And that's what's driving, the $80 range revenue per visit. In this last quarter, we saw significant growth on our platform providers. Those are non-Amwell doctors, delivering care on the platform. Sequentially, that was north of 15% quarter over quarter. So the shift, we saw in Q4, and we're seeing continued into Q1 of this year. Ido?
Thank you, Keith. And Ricky, it's good to hear your voice. One cannot overstate the enormity of what happened in the 2020, and I think it will take years to fully understand it. The trend is very palpable, although the velocity of the change is hard to predict. Therefore, we are very comfortable with our reiterating our growth assumptions going forward, not ignoring the enormous upside that still exists. If you need to summarize the trend, telehealth moved from an alternative acute care service into an enabling platform, which is part of everyday healthcare. We've talked about it only a year ago as a vision, and it really has become a reality. We believe, especially with the release of Converge, that our technology gap as an enabler is significant, and we think that the number of providers adopting it is a great indication of what's going to happen going forward. So we are very comfortable stating that we believe that there'll be a preference towards technology revenue that is obviously infinitely more efficient and much more scalable going forward. And we're going to learn a lot this year about the velocity of this change, and when we have more data, we could come back and reanalyze our future guidance.
Thanks, Ricky.
The next question comes from the line of Robert Jones with Goldman Sachs. Your line is open.
Great. Good evening. Thanks for taking the question. Keith, I appreciate all the data points you shared, particularly as it relates to 2021, but I was hoping to get maybe even a better sense of what you're expecting as it relates to the health systems and health plan expectations for new ads and revenue. If I heard you correctly, it sounds like you're expecting AMG will make up about 50% of revs. Sounds like the innovator revs will be a little bit better than what you saw. And so looking at that, what that means on just projections for subscription seems like, a little bit of a deceleration if I'm thinking about that right. Anything more you're willing to share just around what underpins the assumptions on the health system and health plan subscription assumptions for the guidance?
I mean, it's for the health systems, it's adding new health systems as well as, the expansion of the average contract value. So, you saw our average contract value expand nicely. As I said on the call, we see, both of those dynamics continuing to happen into 2021. So, the name of the game there is, land and expand. So landing new hospital system logos, expanding the current customers that we have through, both the rollout of additional modules as well as getting back to, the cell phone plan. We want their providers to deliver more care virtually. So, those visit counts adding into the subscriptions, that was part of the increase in Q4. So we're seeing that happen. On the health plan side, just to be complete, there it's more expansion through the population, expansion, of new programs like virtual primary care, and other programs out to the membership base. So, it's land and expand on the system side and expansion through the population on the health plan side.
Okay. So if I'm hearing you correctly, not a big deviation from what you had talked about before as far as new additions for health systems or health plans in 21.
We would say that our conversations are really exciting, in terms of pipeline, in terms of, and I guess, Converge, if you look at the announcement of Converge, that's a reflection of the level of conversations we're having with our partners. These are the biggest players in the space, and it shows the demand there to deliver the care on the platform. So, they were bringing forward their designs for, longitudinal care and what they wanted to do virtually on the platform. So we had to accelerate our expansion on the platform. So, we're really encouraged and excited about, the level and depth of the conversations we're having.
Okay, great. Makes sense. Thank you. Sorry, Ido, go ahead.
Just to add a detail. When you analyze what is subscription revenue, subscription is recognized revenue for an enterprise implementation of a hospital or a delivery network. It's safe to assume that in 2020, everybody was focused on their day job, and the idea of implementing a new infrastructure was really far and foreign for everybody. It's also safe to assume that everybody is up right now. everybody realizes that you have to have digital connectivity infrastructure really in order to survive and in order to grow. And that's the conversation that Keith was alluding to. The discussion there is not about the price of AMG doctors or the capacity of doctors that we have. The whole discussion is about simplicity, integration, modularity, scalability, and many other features and functions where we believe we have a significant advantage around. So overall, when you think about subscription revenue, we're actually fairly bullish when we look into the future.
Got it. That's helpful. Thank you both.
Thanks, Bob.
Your next question comes from the line of Sean Wieland with Piper Sandler. Your line is open.
Thank you. So what can you tell us about the virtual primary care launch with United that you announced? Can you size that for us with respect to the 21 guidance and give us a little bit more detail on that launch?
So Sean, terrific to hear your voice, and thank you for joining the call. You know that we cannot discuss any specific clients' details and numbers. That is something that we really care deeply about. However, I'm glad that you brought the topic of virtual primary care modules and programs, which we believe are very important. And as I said on the call earlier, really a way that most people, in our opinion, will experience healthcare going forward. So for those on the call that are less familiar, this is the technology and service infrastructure that allow people to start their interaction with the healthcare system, not only telehealth, but the entire healthcare system online. So you go online, and then you have a highly personalized experience using artificial intelligence and very empathetic people that offer you a choice of the entire spectrum of services, from online programs and people to labs, imaging, and physical referrals. This infrastructure is really designed from the get-go to encourage and support recurring longitudinal relationship. So for the consumer, it really is a wonderful way to experience healthcare. It's trusted, it's immediate, it's personal, it has an element of choice. For the payer sponsor, for the risk bearer, it's an opportunity to really pre-negotiate the network and the options that you see, and to make it also very efficient financially. We are very glad that very large client chose it as its backbone, and we will let this client and others tell the market when they're ready about their experiences. But when we talk about the superiority of our technology, whether it's convergent and virtual primary care is definitely part of that family, part of our platform. And when I said I was bullish about the future, this is definitely part of what I meant.
So Sean, to go a level deeper for your model. So there's two parts that I see of revenue coming out of on virtual primary care. There's direct and indirect. On the direct side, there is a access fee that is either paid in per member per month or a blanket access fee, depending on the plan that we are working with. There's a transaction fee, and this is the interaction with the member by the plan provider. And this is really where it's all going, and what got those plans that we have been announced, as well as plans we're talking to, get them really excited. And then there's the clinical fee, because this is a new way. This is full longitudinal, full spectrum, fully coordinated care that is being delivered on our platform. And so that takes time to bring their doctors up to speed on how the coordination of care is going to impact them, where they need to plug in, where they need to have, a primary node coordinator. So as backup, we have our AMG doctors, at the ready, that if someone has a bad experience using, virtual primary care for the first time, they're not going to use it again. So our doctors, and I'll get to the visit impact in a second, our doctors, we are assuming are going to be helping out in the beginning a lot, and tapering off as more and more of their doctors become part of, the care coordination plan. Then there's the indirect part. This is fully coordinated longitudinal care, or at least that's the thesis of our partnership with, the one customer that you referred to. So there's a lot more programs. This is, a goal for us and a goal for them, bringing more programs, bringing more coordination, bringing more holistic care to the forefront, to deal with these members. There's also maybe RPM, to be able to, regardless of the age, add some of the RPM functions that, I'll let Ido comment about in a second. But as it relates to the visits, this is an important point. We are projecting or forecasting the same number of visits in 2021 as 2020, but the components are really different. There was a significant number of visits that were performed in, March, April, May, that were just simple one-off urgent care demand. Okay, I think I have COVID, dealing with different components. That has completely shifted in our 2021, forecast, where those components are being replaced by our specialists, being replaced by, their provider doctors, your doctor plugging in and delivering care to you. So, a big part, not a big part, but a component of, the visit forecast, the same number, zip code as 2020 includes those virtual primary care, backup care, our AMG doctors. So, Ido, do you want to talk about some of the other components that we see coming in as the indirect revenue that we've been talking about?
Yes, absolutely. Thank you, Keith. Sean, I wish we could talk more freely, but as I said earlier, we're limited about what we can say about some specific clients. But to help you understand the dynamics, implementing virtual primary care is a no-brainer for a payer for obvious reasons. It's so efficient, it's so member-friendly, and things of that nature. The way we monetize that infrastructure is A, by technology subscriptions, B, by the volume, that how often this technology is being used, and then by the scope of services, more modules, more programs. Then there are clinical fees. So all these are direct fees that relate to the scope of deployment. No one is deploying this overnight nationally. You deploy it over time, state by state. It's staged. You add more modules, you add more programs, but the direction is very steady. And we know this is going because it adds so much value for everyone. The indirect effect is even more profound because, as you remember, unlike others, we have one platform. So imagine that the option that you see on the virtual primary care platform become available to them as well. On the flip side, this service with a